Hello guys, and glad to have you on board again today. We had those earnings released. They were quite of mitigated, depends on whatever you're looking at. Microsoft numbers not necessarily suggesting that these price valuations can be sustained much longer. This is still a fairly complex dossier. We can talk about it, but this is not the point of those intraday sessions. So we're going to try switching rapidly right to what we are going to be doing on those intraday basis. We also had Tesla. The numbers are much better on this side, but still the price out there are much higher already. So in terms of how longer we can sustain those market prices and how much further we could eventually go, that is still a big question mark. So overnight session has been early activity trades going to the upside on Tesla. We're going to eventually have a look at this if we have some available time. I want to keep those podcasts during no more than 15 minutes. So we're probably not going to have time to go out there. So let's start right in here. First things we're going to be doing and introducing into this podcast, all right, still having to deal with my cat, is those things that we're going to pick up from Finviz website, which is core elemental information that will save us quite some time and allow us to get below the 15-minute bar. So what we're clearly having a look at with this thing is just a quarterly based, monthly and weekly based, and a daily relative performance of sectors within the S&P 500. So it's just for us to see clearly and clearly if there is a lack of market participation, lack of structure, and more importantly, if there is an underlying trend in the global S&P 500. So we can definitely say, yes, it's overall green on all time frames. So if you figure out the answer of whether or not your context is bullish, bearish, whatever, this can only come with at least bullish something, bullish range, whatever. It has to be bullish because all of these time frames are bullish right now. There's not even a clue about any type of consolidation out of this. So it's really going to save us some time. What we can see out there as well is there is a clear lack of market participation in here in terms of market structure. The market structure is totally irrational right now, as we can see some asset classes like basic materials going more than 32% gains over the quarter, as on the opposite side we do have utilities barely pricing in 4%. So it is totally disrupted market participation. That's something we're going to note, but that's nothing more than that. It is just in here to give us a simple answer whether or not we're trending. The answer in here is totally yes. We'll go one step further in here, analyzing the intraday cash sessions of yesterday. Once again, saving us a little bit of time in here to just figure out if whether or not yesterday was a trending day. We can still see in here quite some staggering information. In terms of volumes that you see with those blue bars on the left part of each chart, seems that we have an average volume. It's not big day, it's no tiny day. Average volume. The session seems to have been quite like the same for every asset in here. The Dow Jones has quite a similar session at the Nasdaq and the S&P 500, which was not the case a few days ago, in which we had Nasdaq totally going up when others were going down. So we see the same overall structures for indices today. Nasdaq would be kind of the lagger after being quite a leader for a long time. So we're seeing this, and we see, of course, that the early part of the session was pretty much going sideways after switching for a pretty bullish end of session in which everyone got pretty much vertical straight to the candle close. Then we have a look at market participation into the intraday session right in here. So it's pretty much looking at this, all right, but in a much broader perspective. So in here we can have a look at weightings. So we can see if we're into this stupid paradigm in which we are into right now, calling it most likely call it a bubble, which is we buy what's big because it's too big to fail. So we're not necessarily into this yesterday. Yesterday is pretty much a broad market participation, but not the energy sector, of course, which is and has been a leader one day before. So as we can see in here, still the same headlines, all right. For the downside, we do talk about trade deal within US and China and probable problems in here. The dollar is significantly moving right now. So we're having a look at this eventually during the weekend. We're definitely going to be making an update on forex if I have time. By the way, I won't be there on Friday. So Friday is going to be an off day for me, okay? And more importantly, I might not be able to record the weekly podcast before Sunday. So it might not not be the usual scaling, time scaling, but don't worry, you should get it by Monday anyway. Regarding the economic calendar, today is just all about initial claims. That's the only thing that I care about. So we're going to see unemployment numbers, see if we are still dealing with this complex situation in which we are either reducing the unemployment, but we're still having shit tons of people getting into claim for unemployment. So it is a complex situation. We could see the bright side of it. We could see the dark side of it. I tend to believe that we should have gray area, of course, as once again, but some people tend to see just white right now, just like, all right, we do have less people being jobless, or market job participation is getting better. All right, so we do have less unemployed people, but we still have in the same time more people asking for the help. So it's still totally stupid. We shouldn't get both of those numbers going up. So I don't really understand what the fuck is going on, but we're going to have a look at this as those numbers might be interesting. And finally, we just have a quick look at our cryptocurrencies, just making sure we're not going to forget a huge move, because of course, mostly in here we're going to be dealing with the S&P 500, but a little once in a while when we do have big move or important move with cryptocurrencies, I'll try to cover them as well. All right, so straight to our charts right now, and let's have a quick look at what we're dealing with. So first and foremost, having a quick look at the H1 time frame chart so we can see our intraday context and set up our boundaries. All right, sorry, quick spoiler out there. I'm gonna get to this later on. It's just once again, I'm dealing with the French guys first and then recording you as well. So what are we dealing with in here? Just first of all, delete the prices if you have any problems reading, and first and foremost, if you're having a look at this and reading the market from left to right, don't forget that you're getting it all wrong. And if your eyes are totally looking at this right now, totally wrong as well. Just first and foremost, have a look at the context channel. What does it look like? And therefore, is it relying to any reliable context you know about? Definitely an yes answer coming out of this one, as we can clearly see that it is bullish, it is going well, it is unfolding context boxes to the support, and is getting stickier and closer to the resistance trend channel now, now more than anything else. So the thing is that we're dealing with trends, whether we like it or not. It is a trending context, and the fact that we do have unfolding supportive boxes means that this context is getting pretty mature. So the trend is now getting its final stages, which means it's not about time to play trend follow, otherwise it is with quite some levels of risk. So if you really want to be playing that trend follow stuff, you still can do it, because remember that right now we're dealing with a totally stupid market, which is not necessarily following technicals. It's more about following the inflows that are infinite. Apparently we do have infinite amounts of money, and we're expecting much more to come. So prices are inflating, and that's somehow understandable. I think it's questionable at some point, but still understandable. So the big question right here right now is, when are we going to get these reversal structures? I still have no reversal patterns, as all we've got out there still suggests normally trending behavior with no taking profit, whatever. So is there still some bullish potential? Seems to be yes, because yesterday, even though it was a pullback, has been triggering trending signal on the trend channel, and the market reacted. So isn't that enough for you to understand that the market is still trending right now? I hope you do understand how this thing works. So the next technical area for reversal traders are going to be there, where we can see the resistant trend channel, and when we get the resistant context, remember that we could eventually get on top of it, because previous market tops have been made above the resistant context. Reason why I tend to believe that this is still at play right here, right now. So I would suggest this area today. God damn it, I'm going to make it. For those who are experienced enough to eventually deal with a reversal context. For those who are bullish into this thing, normally I doubt many of you guys are into, because, I mean, I've seen absolutely no early activities suggesting a trend was going on, but now here we are. Yet here we are. Trending, and we need to deal with that. Trend is mostly an invalidation structure for me, as I was looking for ranges, and instead of this, looks like I'm having trends. But I'm still going to look for the reversals as cover positions for a bullish portfolio. Once again, I need to be real clear with that. If you're short selling the market right now without having a single bullish entries on top of it, like buying any kind of stock you would be wanting to buy, you would be making a very, very stupid mistake. So please don't do this, okay? No short selling like we did years ago. For the latest 2 years, short selling was totally okay. Even though people called me crazy, you know that actually it happened that I was wrong. I was right and they were wrong. But now is a totally different time. It's not about short selling the market. It's more about covering bullish positions because of the heavy amounts of risk we have below our feet. The problem still stands with the VIX. And I will go straight with this one. All right, let's put the candles back in play. You'll see we're dealing with the previous bottom area out there. We do have exit reversal patterns in here. So are we going to get a double bottom on volatility? I damn don't know. All I can say is that yesterday we had an early bullish reactivation out of this support. Going back out there today probably is going to be causing a breakdown and therefore breaking up on stock indices. But we live in a world in which nothing actually happened anymore. When we do have bad news, I mean, we don't know, we don't care. When we have good news, we do everything we can to contract volatility. So we'll see if that pattern can still play once again. Normally, when we get back to a previous support, we will break it. So odds are still favorable to the downside, still trending signals on the trend channels out there, even though we cannot necessarily make reliable technical analysis out of VIX. We will assess the fact that yesterday, both the stock and the volatility derivative have been signaling trending signals on their respective trend channels. So I would say the only context and tradable context for the day are either trend following, but you need to be really, really cautious in a perspective that this trend is fairly mature. So right now, playing the trend follow stupid stuff is very risky. You can still go down there if you really want to, but just be aware that whenever you reach out to the profit taking area, just don't play God and take your fucking gains. Okay, more than anything else, as the trend is matured, either you don't trade it because that's what the PDF manual tells you. Normally you shouldn't be trend following at that point, but if you really want to, do it with reduced position sizing. Okay, experienced enough guys, favor reversal trades today, and that's it. But once again, only if you have bullish exposition on the portfolio to compensate if the market turns out to be absolutely excessive, which is totally possible. Once again, remember, we're dealing with a stupid stock market context. All right, that's going to be it for the day. So let's put a quick conclusion out there before we reach out our 15-minute boundary. So the thing is, to sum up the core information, mature trending, therefore very complicated to play the trend following stuff on the lower time frames. You could still do it, but make sure you really do it on 3-minute time frame charts or stuff like that. Trend following could still be possible, but the low point is yesterday's low point. So if you really see a market retracing down to yesterday's low point, you know you're really having a lot of trouble. So for any intraday trader, there is a clear and evident stop loss out of yesterday's low point. This is where we reactivated on the trend channel. Right now, the overall context you're dealing with is a mature trend. Therefore, very cautious. Those who are rocky enough to try going on the opposite direction needs experience, needs bullish position on the portfolio, needs a lot of caution, needs reduced position sizing in here as well. So that is pretty much all the things. I'm sorry about all this freaking brightness. It's just that I started recording the French podcast way earlier and there wasn't that much light coming in and I just didn't readjust the thing in between. So don't worry, it's not gonna get this all white stuff later on, but that's another topic for another day. I'm gonna make this thing a lot more professional throughout time. So it's just right now I'm making the clear chest and see how this goes. Anyway, guys, I wish you guys a pleasant day and see you tomorrow eventually if we do have things to talk about. If not, then we'll see each other again during the weekend, probably on Sunday to prepare for next week and talking about more swing trades, time frames, and stuff like that. See you guys later.